What if I told you that some of the smartest investors in the world are quietly moving their money into gold? Not stocks, not crypto, not real estate, gold. From billionaires to central banks, something big is happening behind the scenes. And if you're investing in today's uncertain economy, this is something you need to understand. So in this video, we're going to break down why smart investors are buying gold right now and whether it might make sense for you too. First, let's talk about the economy. Over the last few years, we've seen high inflation, rising interest rates, bank failures, massive government debt. And many investors are starting to ask a simple question. Is the financial system becoming more fragile? Historically, whenever uncertainty rises, investors look for safe haven assets. And for thousands of years, gold has been one of the most trusted stores of value. Unlike paper money, gold can't be printed by governments. Unlike stocks, it doesn't depend on company profits. Gold simply holds value over time. That's why during times of economic stress, investors often move part of their wealth into gold. Here's something most people don't realize. Central banks around the world are buying gold at record levels. Countries like China, India, and Russia have been increasing their gold reserves year after year. Why? Because gold helps protect a country's wealth if currencies weaken or global financial systems become unstable. Think about it. If the institutions that manage national economies are buying gold, it's worth asking, what do they see coming? Smart investors often watch what the big players are doing. And right now, the big players are buying gold. Another big reason investors buy gold is inflation. Inflation slowly erodes the value of your money. For example, if inflation averages 3% per year, your purchasing power could be cut almost in half over 25 years. But gold has historically acted as an inflation hedge. When the value of the dollar falls, gold often rises. This is why many investors treat gold like financial insurance. They're not trying to get rich overnight. They're protecting their wealth in case the value of paper currency declines. Another reason smart investors buy gold is diversification. You've probably heard the saying, don't put all your eggs in one basket. Stocks can crash. Real estate can slow down. Crypto can be extremely volatile. Gold tends to move differently from these assets. So when markets become unstable, gold can sometimes help balance losses in other investments. That's why many financial advisors recommend keeping 5% to 10% of your portfolio in gold or precious metals. Not everything, just enough to create protection. One of the biggest misconceptions about gold is that it's only useful during crises. But historically, gold has been a long-term store of wealth. Over decades, gold has maintained purchasing power far better than most currencies. For example, decades ago, 1 ounce of gold could buy a high-quality suit, and today, it still can. That's the power of a hard asset that governments can't inflate away. So to recap, smart investors are buying gold for 3 main reasons: economic uncertainty, protection against inflation, portfolio diversification. Gold may not be the most exciting investment, but when the world becomes unpredictable, sometimes the oldest asset in history becomes the smartest one to own. And the question investors are asking now is simple. Should gold be part of your portfolio too? If you enjoyed this video, make sure to like, subscribe, and check out our next video on smart investing strategies for beginners.